Greetings, Earthlings. All right, looks like we got people back. Sorry about that. I don't know. Just had to reboot the old router. All right, well, let's get on with it. It is 8:11 in the morning, approximately 90 minutes or 80 minutes. 79 minutes before the stock market opens. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, welcome to Forex.Today. My name is Wayne McDonald. I am a currency trader just like you. You can change your life with this thing called Forex. I search and search and search for the perfect business, and this is the purest form of business I've ever seen. We buy and sell money. How awesome is that? So, in these live streams, we try to tackle things like technical analysis, fundamental analysis, global macroeconomics, seasonality, trader psychology, and every once in a while, calculus, like yesterday. Sorry about that. I apologize for the calculus. Anyways, so thank you for being here. Thank you for asking awesome questions. Thank you for the positive energy you show me every day. Thank you for everything you do. I know you're working really hard to do your absolute best. I've been doing this for 20 years, and I'm still trying my absolute best. This is a difficult gig, but you end up not working very much, and you get paid too much. So that's the cool thing about Forex. Unless you want to work all day, that's fine too. You can skippity scalp all you want. That's the cool thing. Whatever you want to do, you can do it. Right on. Today's stream is brought to you by TradersWay.com, foreign exchange broker that would like to earn your loyalty and respect. Would you please give them a chance? Visit TradersWay.com, open up a demo account. Fast execution speed. Cha-ching. Narrow spreads. Cha-ching. Or if you have an ECN, low fees. Big awesome swaps. Cha-ching. World-class customer service. All that's really good. But think about the attitude of trying to attract you to their business through education with the hope they're hoping you will be a successful trader. So maybe you're like, that's what I want in a business partner. TradersWay.com. TradersWay.com. Cool. So what's going on in the world? Jay Powell said, yep, nothing needs to change right now. We're not really worried about things. Kind of covered that yesterday, just slightly, just a little bit on in the swing trading group where I had talked about, the central banks are worried about deflation, but jacking up inflation, they're not that worried about it. They're like, whatever. So Jay Powell's like, yeah, we're going to keep doing what we're doing. Yeah, you don't really need the money, but we're going to pump it into the market anyways. Cool. Seems like right up Biden's alley. Very cool. And by the way, speaking about Biden and all the free money, I think we got a vote coming up this week, don't we? Is it Friday? Where they have to vote on the stimulus. Now, the interesting thing is we don't really need the stimulus, but I think they're going to do it. So we're going to get our $1,400 checks. And then we're going to extend unemployment benefits. And all that, I guess, is all right. And then I think they should probably just stop everything else. Do they really need to refund COVID? I guess so. But I don't know. $2 trillion sounds like a lot. Okay. 1 trillion used to be unheard of. Now 2 trillion on top of 1 trillion. So after a while, that's a lot of tea. So anyways, we'll see. Be very interesting, actually, in the economy, where on the same day restaurants open, you get $1,400. You know, that's a lot of chicken wings. You know what I'm talking about? Buy Hooters stock, maybe. But wowzer. So we'll see where that goes. Right now, everything is overpriced and going higher. Did you guys see that? Was it Case Shiller? The Case Shiller report. Real estate prices up 10% for the quarter year over year. Oh, wee, as they say in Betty. Holy smokes. So once again, if you're rich in America, and by rich that means you own a house, you have a retirement account invested in the stock market, then you are certainly richer than you used to be. Okay? And hey, if you don't like it, you're like, man, it's all the rich are getting richer. Then get in the game, son. Quit your bitching. Stop hating. Start hustling. Get in the game. If that's the game, then save, invest, and defer, right? So anyways, whatever. That's how the game works. Get in the game. That's probably the biggest message, right? For those that are not in the market, get in the market. Love the game. Don't hate the player. So think about that, actually. Who's the largest owner of your home? The bank. Yet you get to keep probably 97% of any profits left over. That's a pretty good partner. The bank owns most of your house. You get to keep 97% of the profit, which is really cool. And so for those that own a home, the value of your home went up 10% in 3 months, and you didn't lift a finger, you didn't paint, you didn't put in new windows, you didn't install a pool. You just simply own a piece of paper that says you're entitled to the upside profit. Pretty amazing, actually, huh? What's the calculation behind currency indices? Well, I'll tell you what mine is, okay? Swiss franc versus all of these currencies. Dollar versus Swiss franc versus Kiwi versus pound versus Aussie versus euro versus CAD versus yen, okay? So it's an equally weighted basket. I used to do this manually on an Excel spreadsheet every single morning. I'd do these calculations. I wouldn't do it on price, though. I'd do it on overnight volatility. So I wanted to know not which was the strongest per se, but which one moved the most. And then I'd say which one moved the most positively, which one moved the most negatively, and then come out with an answer and then trade strong versus weakest. So this isn't relative strength. It's more like a weighted strength, if you will. Cool. Good question, though. You should always ask what your indicators are doing. All right, so why don't we start with this? Please let me know what you're most interested in, and I'll do my best to cover today. What currency pair, commodity, whatever. What would you like me to do today? Probably not calculus. We did that yesterday. Gold and crude. Yes, I can do gold and crude. I'm cruising, I'm bruising, I'm never losing. I'm in my car going fast, and this is what I'm doing. Around the way is where I'm from, and I'm from Manhattan. I'm not a bum. Skirt chasing free base and killing every building. All right, dollar index, gold, USD kitty CAD, USD ZAR, euro dollar, some peso, and some Swiss franc. So I guess everything. You want me to cover everything? Sorry, not enough cigars. Okay, I'll cover everything. Sure. That's not a big ask, but that's cool, man. You're my sweet baby. So, first of all, we have to look at this. Dollar was weak, beginning some strength, so that was risk on with a little hesitation. Probably market open related. Swiss franc dropping like a ton of bricks. Okay. Switzerland wants a cheap Swiss franc, so that's good. I'm really happy to see that it's finally here after a couple of years. Finally, it's doing what it should be doing, so maybe we have a lot of catch up. So yeah, we could take a look at that. Typically, I'd look at like PISSY, right? Pound Swissy, Aussie Swissy are usually my first go-tos. Okay, so we could take a look at those. Euro is euro. Euro is euro. So a weak euro is bad for Switzerland. So what dumped the Swiss franc? Well, it would be, I mean, I think we touched upon this last week about, Europe being Switzerland's largest trading partner. So a strong Swiss franc is bad, or, which is kind of the same thing, a weak euro is bad for Switzerland. Switzerland doesn't want a strong Swissy, nor do they want a weak euro. So maybe they're doing things to have a positive impact on their economy. Maybe they're doing their job. Okay, so it's just central banking. I'm just happy to see it here because even just a couple of weeks ago, we were talking about how I always pictured Switzerland, private jets pulling up into Zurich and, rich Saudi princes are jumping out of the airplane with bags of money and gold. And they're like, everything's bad, locking up their money in a Swiss bank account. Well, right now, everything's good. And a weak Swiss franc is awesome. Also, when was it that I taught you about bond yields and the relationship with currencies? Was that Monday? Well, why don't you take a look at bond yields, particular long end of the yield curve on bonds around the world, in particular the United States of America, and say, I wonder if that's impacting the Swiss franc. And of course the answer is, heck yeah. Hecka yeah. Hella yeah. Okay? So, the answer to everything, by the way, you're like, why is this happening to the Swiss franc? Central banking. Macroeconomics. Okay? It's the answer to everything. Okay? So, again, whoever asked the question, I think it might have been Stevie. Hey, Steve, look at yields on the 30-year U.S. bond. Okay? Or prices. How about that? Forget it. Forget it. Don't even look at the bond yield. Look at bond prices for the 30-year bond in the United States, and then look at the value of the dollar and the Swiss franc related to them, and you might say, So instead of me telling you, which I already did a couple of days ago, now you need to jump in and do the research and see the correlation. Cool. All right. So let's start with the buck. The buck starts here. Okay, we're tearing it up, getting close to an high here. 2 standard deviations. We're caught on the 1, but we got about halfway through. So we're trying to get up to 2 standard deviations from the mean, which is a fun way of saying we're on trend and we're hot. We're hot. We're thinking up, and we're at the upper bounds of normality for hotness, which is the story of my life, of course. Okay, so everything is good. Everything's great. Everything's grand. It's moving up. Dollar's weak. Fantastic. So again, why is the dollar so weak? I'd remiss to not once again say we're expecting it. I mean, just imagine 2 weeks ago I said, in the next 6 weeks, right? Think about this, 2 weeks ago. Find any video. I probably did it every day of the week. I said, in 6 weeks, we're going to have weak dollar. It could be today or tomorrow, but it could be 6 weeks from now, but probably not 6 weeks from now. Maybe it's 4 weeks from now. Maybe it's 4 days from now. Maybe it's 2 weeks from now. Maybe it's in a week. Maybe it's in 5 weeks. I don't know, but it's coming. Your job is to look for the freight train while you're standing on the tracks. How many people kind of remember that period? Okay, I don't want to stay long on this topic, so I just want to make sure you're reminding yourself psychologically. You're like, yes, Wayne, we've talked about it 20,000 times. That's where you need to be, because then you have to have full mental and emotional, intellectual and emotional buy-in. So you're like, okay, yes. So did the freight train show up yesterday or the day before, the day before? Well, that's for you to decide. I don't know. And if you get it wrong, you're flat. You're like, what freight train? Right? Now you're a stain in the market. Okay? So you have to decide when it's shown up. And then we talked about the average not being relevant because nothing is ever average. And then we said probably early, not late. Why? Stimulus, Fed policies, whatever. Okay? So we're like, maybe, so if it's in 6 weeks, maybe it's more like in 2 weeks. So now it's been 2 weeks and now the dollar's ripper weak again. Is this the one? I don't know, dude. I don't know. Could the dollar get strong again and then we end up buying it in 4 weeks? Yeah, totally. I don't know. But the thing is, when do you think you know is the answer? Okay? All right. So one of the things we found out is Biden's still going to push through $2 trillion and the Fed is not going to cut back stimulus. Do you think that would give us an early launch? Or do we want to hold off, risk on, like, we're not sure? I'm not sure. I don't know what the dollar's going to do for the rest of the year. Maybe we'll wait. Maybe we'll wait. Maybe we're not sure. Maybe we now are sure. When will you be sure? Okay? Okay? So that's cool. So that's where we are. So anyways, this is accelerated. Doesn't mean it's going to continue accelerating. Often that will lead to profit taking. The acceleration will lead to profit taking. Okay? Let's try to look at this. Look at the trade plan here. Cool. Up, hit, stop. Okay? What does this mean? Well, if you recall, we talked about the euro going up relative to the dollar, but not because the euro is strong, and in fact will probably lead to upward mediocrity because nobody actually cares about the euro. It will go up and down based on what the dollar is doing because it's 40% of everything, and the dollar is almost, is the reason for that because it's the reserve currency. So it's the dollar fluctuating, and Europe is doing what Europe is doing, which is nothing. Okay? Do you remember the guy that said, we plan on doing less for longer? Well, now he's Prime Minister of Italy. Woo! That, my friend, is a leader. Can you imagine? I still think it's funny. Me and the European Council have decided that we're going to do less for longer. You're like, what an epically awesome job. How much do you make for this? We only make 582 million euros a year. I guess probably closer to 580,000 euros a year for doing less, but they're going to do it for longer. It's so great. So anyways, at some point Europe will become a place to put money because everything is too expensive in the United States, and we've been talking about a rotation. But here's the thing: now we're in this point in time, which I swear to you, I wouldn't have thought would have happened a year ago. Okay, we're at this point of time where we've dug ourselves out of a global pandemic. We've spent trillions of dollars, right? 500,000 people died, 20 million in the United States. 20 million people got sick, but now we're vaccinating hundreds of millions of people. And we're spending trillions of dollars and trillions of dollars more at a time when the stock market's at the all-time high and everything, and asset prices are through the roof. Bitcoin's on its way to 100,000. Gold is at a bajillion. Copper is at like a multi-year high, and we're just starting a cycle. And real estate is up 10% in 3 months, and we're like, you know what we need? We need more stimulus. You're like, wow, really? Holy smokes. So the thing is now, like, when do you have to say it's so unbelievably expensive, we can't go higher? Well, I thought we were kind of there not long ago because we sort of had the flash rebound from COVID, and we got the support we needed from the Fed, and the government stepped in and did some things, right? And gave us the stimulus that we needed. So everything like was expected that happened. And then the response to all this, this activity on the fiscal and monetary policy side, and of course the efficacy of the medical response now, all seemed like good and on its way, and like we're working our way through, and there was some things overpriced because of sort of the catch-up effect and all that. But now there's icing on the cake. And that means there's probably still more upside before we decide to say, okay, we just can't buy more. Now we have to buy European, right? And that's that investment decision. I mean, I'm laughing as I say it, but it's a legitimate concern if you're managing billions of dollars. When do you stop buying something that's going up unbelievably fast and instead buy an alternative? When do you make that decision? And right now, I think people are going back to say, you know what? I don't want to buy a Bitcoin at 45,000, but maybe I will. I don't want to buy an apartment building that is at, the all-time high. But I kind of have to. I don't want to buy the stock market at 30 whatever thousand, but it's probably going to 50,000 in the next 5 years. So like, you don't want to really do it, but with all this unbelievable stimulus, like think about it. New York City, probably the epicenter, ground zero in the United States, right, has allowed restaurants to have 25% capacity, just kind of to keep them alive. And now they're increasing it to 35%. And you're like, well, that's still not much. But the thing is, they're opening up. The epicenter is better than it was. And what are we going to do now? Give everybody in New York City $1,400. Dude, the bars are going to do great, which is good because you want to get that money back into that part of the economy. And, the restaurant owners have taken a large hit and all that kind of stuff. And we want the waitress at Applebee's to get her job back, right? But $1,400 is a lot of money. Okay? So the question is, am I afraid that it's bubbling? No. Now, one of the reasons, by the way, so that's easy because the bubble will continue to bubble until it bursts. And we have very good economic reasons why these things burst. Now, the pandemic is one thing. That's an exogenous shock. That's a black swan. But if you do economic analysis, that's our whole job as an economist to say the bubble is about to burst. And do not believe when you watch all these documentaries and you watch, like, I watched The Wolf of Wall Street, or what's the other one? What's the one about the crash in the real estate bubble? And everyone's like, that's The Big Short, right? I watched The Big Short and it was horrible. What a lot of the media will tell you, mostly because of the powerful people with money, they'll tell you it's unpredictable. There's no way to know a bubble's going to burst. Of course, that's stupid. Of course there is. Of course there is. Absolutely, without a shadow of a doubt, there are huge warning signs that a bubble is about to burst. Okay? So we're a long ways from that. So am I going to worry? No. Also, we're Forex traders. Okay, so the bubble is expanding, and I'm shorting the dollar. I'm going to short the dollar pretty much every single day, year after year after year after year after year after year. But then the bubble will burst. So now I'll buy the dollar. Now, a real estate investor is screwed because now they cannot sell their building. It might be another 10 years before they can sell their building. But in 2 years, they need to refi. And they're going to have to refi at a lower market value, but they owe more now, and all of a sudden they don't have enough to cover their margin. All of a sudden, I'm drowning. I own this apartment building, and I'm drowning. I can't do anything about it. It's illiquid. Stocks are falling, but I'm not allowed to short. I'm not allowed to hedge, and it's falling. And if I dump my portfolio, then I don't have any clients, and I'm really screwed. Like a lot of that, bubbles bursting are really bad for most investors. Currency traders are supposed to make money. Okay, and the big money, the best years, right? The worst days are birthdays are the worst days, right? Now, the best days are during those periods because we can just buy dollar and now we're golden. We can just buy yen. We're golden. We're making money. Everybody else is losing. Do you understand how awesome you're going to look when everyone else in the market's losing money, but you're making money? Okay. March was a good month for me personally. April was a good month for me personally. Okay? Other people lost money. They're like, oh my God, the market's coming down. Oh my God, I'm losing money. Dude, so now you compare what you do with what other people do. You look amazing on paper. You're like, what? The stock market was down 30%. You're like, well, yeah, it was pretty good. I was up 6% that month. And everyone else lost 30. Now you're 6. You're like, okay, that's actually pretty good. Normally I only get 3 or 4. Hey, 6 was a pretty good month. But the thing is, you have an opportunity to make money where everyone else is losing money. Your plus 6 looks way better than negative 30. And then, of course, everyone has to, on the other side, has to degenerately gamble to get back in at the bottom of the market. And you're like, well, there's the bottom of the market. And you stop buying dollar and you start selling dollar. And all of a sudden, you're just like, once again, 6%, where other people are like down 30, up 30. And you're like, whoa, the volatility is crazy, right? Your Sharpe ratio's through the roof. And all of a sudden, you're like, wow. Okay? So we're good. So bubble bursting, good. Let it burst. What do I care? Oh, yes, I own some real estate and I have a lot of money in the stock market. Okay, fine. But I can't do anything about that except make money in Forex to kind of hedge, right? So at the end of the day, do I worry? Well, I don't want my retirement account to go to zero, but I can always make money in Forex, right? That's the thing that we have that the other traders, investors never have. We're completely liquid, and there's always a bull market. It's either a bull market for the Aussie or it's a bull market for the US dollar, all right? Like, one of them's going up, the other one's going down, and it doesn't matter to me which way we go. And we can liquidate your whole position in a second. You cannot liquidate an apartment building in 1 second. Okay? And remember, an apartment building, you have to refi every 5 years. You might be in the 4th year, and you're coming up to a refi in 12 months, but the value of your property just dropped 30%, and your vacancy rate went up to 10%. And now you go back to the bank, like, would you like to refi? And they're like, it's not worth it anymore. You're gonna have to pay back our whole entire loan. And you might be a couple of $100 short that you have to come up with to keep your property because it's illiquid. Anyways, so we're awesome. Forex is awesome. Okay, Forex is awesome. We're so lucky. All right, so this is mediocrity, but that's to be expected. Let's go on to something more interesting. We had, I think, a total of about 20 people. What was it? Thursday. Okay, I think we had 20 people, so about 3 groups last week in my swing trading group. And we had 3 different plans that said they were going to sell USD Kitty Cat. How many people were in that one of those groups? The plan looked like this. How many people were in one of those groups? I think there was about 20. Maybe it was the first one. Yeah. Okay. My concern here on the daily was the 55s in control. So that's the major concern. But what we were not concerned about is the fundamental, okay? See, technically, you look at it and you say, well, the 55's in control, I'm not so sure. Which is, it's a red flag. Okay? However, fundamentals do not exist on this chart. Fundamentally, if I asked you to sit down and write a 1-page essay on why USD CAD's going to fall, you don't have a chart to look at, so you have to have logical reasons. Not because you're MACD, but because of like, what is the logic? Well, the monetary policy of the Fed for the US dollar, an increase in demand and prices, right? Demand and prices, which are related, right? The increase in demand and prices for commodities. Well, Canada is a commodity producer and seller, so they're going to give the world commodities. Meanwhile, the rest of the world is going to buy the Canadian dollar. So you're like, oh, look, a couple of things you can throw down. You're like, well, I think the US dollar is going to get weak. I think the Canadian dollar is going to get strong. So this pair will fall. Technical analysis is just the timing of the selling. Okay? So anyway, so we had 3 groups, probably about 20 people, and they're like, yep. They all said down, 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 down. Okay, so right, Wednesday, Tuesday, Monday, Friday. Yeah, right there, right at the top. So good job, y'all. All y'all. Now tell me you're killing it. Did you guys get it? $27.50 or 28. Okay. So it's only about 150 pips right now, but it's probably just warming up. Very cool though, right? Gary got it. Yep. You guys are in and holding? Yeah, right on. Yeah, Maida gave us a plan. Gary gave us a plan. And there was one other person that gave the plan, because there's always one group leader that presents in front of the rest of us. Yeah, but anyways, very cool. Sorry, I don't remember who the third one was on Kitty Cat. By the way, it was something like, was that a 4-hour meeting? That was a 4.5-hour meeting, I think. Or was that the week before? Think about it, guys. We put that kind of effort into our trade planning as a group, and we get that kind of output. We're well on our way. That's what we do. That's what the swing do. Okay? Very cool. Let's take a look at this. The opposite and equal would be up, not down. Thank you, Jean-Guy. Yeah, it was good, right? You guys put a lot of effort into it. I know I'm drained at the end of them. I kind of like, I slink upstairs and I just like lay on a couch. I'm like, I was just spent. I need a surprise. Anyways, so Kiwi dollar upish, very cool, very cool, very cool. Let's we'll take a look at a swing, okay? And this one is a tough one because it's been out of position all week. So I don't know if you got any of this. Okay. Okay, let's do this. Quick review for everybody that's not a swing trader. Okay, in a situation like this, how do we catch it? Okay. By the way, I will remind anybody here, you're allowed to join our swing trading group if you find that kind of stuff attractive. Okay? Working hard as a group. Working hard as a group. It's not just me. We collaborate like a real true professional hedge fund would. That's why we call it the war room. We get together and we develop trading plans. We debate them. We debate trading ideas, and then we develop them. Plan A, Plan B, Plan C. And the biggest question we keep asking is, how do we know we're wrong? How do we know we're wrong? Not that we're right, of course we're right, but how do we know we're wrong so we can get out? Okay? FXBootcamp.com. Pay for the courses. You'll be invited to upgrade your account to unlock the live room. All right. So yes, you guys got it. OOP, ride the 21, Brinsley says, but there's only one 21, and Mike's got it. To get full points, you have to say the 4-hour 21. So in a situation like this, you say, I need to buy it off the 4-hour 21. So now we go to the 4-hour. Now I have to zoom back in, and you can see it kick. Okay? Now you see, well, it's not touching. It will be. It'll be touching tomorrow. Let me kind of show you how to cut a corner. So you can do something like insert, indicator, custom, zero lag, 21. Oops. Hang on. First of all, we have to make it thick so you can see it. Or dotted maybe, but I think if it's dotted, it won't be thick. Will it let me do a little thicker? No. Well, we'll leave it at that. The other thing I need to do is I need to shift it. Okay. Okay. Okay, so this indicator, what I do is I use it in the times that I want to buy the future 21. So typically, and let's just change this color to something different but similar. Not red, but let's make it more of a crimson or something. Okay, it's a little darker. Wait, that'll be more too much like the 5 EMA. Well, let's leave it. I'll make it crimson, but let's get rid of the other moving averages. Okay, let's get rid of this one, just so we're focused. Okay. Okay, that's for price. That's for price. We're not talking about price. We're talking about market. Okay. So the 21 EMA is the thin red line that we typically use, and we use this to indicate the market is going up. Price is above the 21. You are bullish and aggressive. Okay. This is straight up out of the textbook. If you were in FX Bootcamp 15 years ago, it was the thing I taught. Price is above the 21, you're bullish and aggressive. It is impossible for you to think selling. You either buy or you do not buy. There is no sell. Okay? Cool. But then what you want to do is buy off the 21. Well, this is more difficult for people because they're so used to using moving averages, I guess on smaller time frames or something, where maybe lag is less important, because if it's lagging 28 seconds, maybe you can't even tell the difference, right? But when you do analysis, we're not interested in the 21 now. We're interested in where the 21 will be in the future. And the great analogy I've used over the years is hunting deer. It's pretty rare that a deer is going to just stand there smiling at you. It's not a cow, okay? So a deer is running, okay? Or maybe if you don't like the idea of a deer, how about a rabbit, okay? The rabbit is running. You have to shoot in front of the moving animal if you want the animal and the ammo to collide. You can't shoot it where it is now, because by the time the ammo gets to where it's going, based on physics, the animal has already moved out of the way. You have to shoot in front of the moving target. And a lot of people have a problem with this because they're, right? And then here's the thing, especially with gurus, right? With gurus. And I get people heckling me, and I understand why, because they're sick of it from other gurus, where they show like, see, you should have bought it off this 21. See, you should have bought it off this 21. And the interesting thing is, if you were there at that moment when they're telling you should have bought, if you were actually there, it wasn't touching that moving average because it's lagging. Now that time has gone by, the moving average caught up, and by definition, it acted as support, and now people say, see, you should have bought it back then. Okay, that's the whole hindsight stuff that people heckle about. And I get it. And they probably get a lot of it, so they don't like it. So they misunderstand what I'm doing. So what I'm saying in this situation, most of the time when you're doing analysis, I'm looking at things like, is the 21 above the 55? Is price above the 21? Where's the 200 EMA? It's okay that it's lagging because I'm asking basic questions like, where are we going? What is the market doing in general? I'm not asking about what the second. I'm not asking about, should I pull the trigger? I'm asking, do I want to be a bull? Do I want to be a bear? Or do I want to be neutral? I ain't going to big no pig, right? So that's okay if it lags. But now when it pulls the trigger, I understand I have to shoot in front of the moving rabbit, okay? So the 21 is here. It hasn't even touched this bottom, okay? So I can speed it up using this zero lag, okay? Because now it's not an analysis question, it's a trading question, okay? So what it's saying is, if you get an opportunity to buy a dip, you should probably buy a dip. Why would it dip? Oops. Okay, why would it dip? Well, first of all, we already know the target. Okay? On Monday, we were here. Sunday night, actually. And we said we are going to hit our target early in the week. How many people agree with that? On Monday, you knew two things. Well, three things. One, we're out of position. Two, you want to kick off the 21. And three, we're going to hit the target early. How many people would assume all three things based on what I've taught you? Okay? It's not randomness is what I'm trying to tell you. You're like, oh, look where we are. It's Sunday afternoon, 6 o'clock in the evening. And you're like, oh my God. Well, I'll have to wait, kick it off to 21, hit the target early, and by Wednesday, I'm out of here. Like, you even know by Wednesday you're going to be taking profit, and you even know the price. Like, there's no random walk down Wall Street. You're like, oh, it's Sunday. Oh, I'll buy it off to 21 on the 4 hour, kick it up to hit the profit target. I'll be done by Wednesday, but I'm definitely getting out. So what's the fourth part? Why would you definitely get out of something that's bullish? You're also expecting a counter trend. Now, I would sort of wash that out with how bullish are you? So I wouldn't say counter trend, but pullback. So you're like, yeah, it's coming down, but I don't know about no counter trend. But I know I'm going to buy it here. And guess what? That's already next week's trade plan. In particular, if you're an aggressive bull. Nice. Cool. Okay. Isn't it nice that it's not a random walk down Wall Street? Isn't that lovely? Do you remember when it did seem random to you? How frightening, huh? Okay, most of these pairs gave you good trades this week. Okay, I want you to recognize. Okay. Okay, or this is monthly. This is monthly. Okay, there were some good trades this week, but okay, this is a monthly. This is the exact price you'd want to buy it. Okay, M2 predicts M4. That's exact, right out of the textbook. Okay, now again, if I wrote this 14 or 15 years ago, I think it was published 13 years ago. So let's say 14 or 15 years ago, for sure, I was teaching people that if you buy it off the M2, your target is the M4, which is 128.50. And that's where we are now. For the month. The whole entire month. The whole entire month. Okay, your entry was on the 4th day, maybe the 5th day of the month, and then you were done. Okay? Okay? So look, January was down, but we already knew that was going to likely happen. Okay? So anyways, so here's the thing. This is the part where people miss. And I say it almost every day, but I guess it's my time of the day to say it. All you have to do is make a decision whether you're a bull. Samuel B., I just explained you have to use the zero lag moving average. That was the whole point of that other conversation. You have to think ahead. If not using the tool, then using your mind. I mean, you don't wait for it to touch the 21. You anticipate it touching the 21. Okay? So, anyways, going back to this, the number one thing that will dictate your success or lack of success will be your bias. Are you a bull or are you a bear? If you don't know that, you will fail. And I mean a long periods of time. So in November, check it out. This is the exact buy price. So if you bought it, it went up and you made money. This one's out of position. So the only way you would have made money in December is to front run it. By the way, we were ridiculously aggressive in November. You probably did front run it. Okay? Then we said in December, we are going to exit, which saved you 3 weeks of pain, but gives you a nice little buy opportunity. Then we start February, gives you another buy opportunity. By the way, these are definitional. What do I mean by definitional? This is an M2. This is an M2. This is an M2. It's the same thing. So you're like, wait. So if I'm a bull, I buy at the M2? Yeah, it's in the book. You're like, well, why isn't it more complicated? Well, I guess the question I would throw it back. Well, why are you making it more complicated? Oh, well, I decide 17 times a day whether I should be a bull or a bear. Well, that might be the problem. Okay? Okay? You have to be okay, like, making these decisions, but once you make the decision, I think it gets easier. Okay? Buy. See the central pivot? Beautiful, right? This one, you're like, whoa, I'm out of position. But boom. And now you have to predict the future. Okay? So let's say we bring this even higher. Then the M2 is going to go a little bit higher, I think. Maybe, so this might be our buy zone. So now you have to think ahead a little bit. It's sort of like using the zero lag, but it's just a tool. I don't care about the zero lag. But at some point you have to make a decision like, will you buy the pullback in March? I don't know. There's the problem, right? right? Yeah. So what does that mean for the US dollar, Stevie? Yeah. Well, here's the thing, Steve. Stephen, if you have taken an economics class at any university in the United States of America, from a bottom tier, middle tier, decent tier, Ivy League, all the way up to Harvard, Yale, Princeton, they will tell you when that happens, when interest rates are skyrocketing on the 30-year, that'll create dollar strength. And of course, it's absolutely pathetic. Of course, that's not true. Isn't that cool? Yes, but you're right. Yes, it would weaken. Okay, now, the interesting part of it is that an economist will prove it using a model that relies heavily on the long run. But how many of us make trade decisions based on what's going to happen over the next 20 years? Okay, well, maybe if you're a real estate investor, but still, that's probably still not quite true, right? And their models are so simplified that they think not globally, but like it's a closed market. But we also know it's not a closed market, it's an open market. Okay? Right, so their variables are kind of wrong in the model, so they're so focused on the model. So I don't know why they say what they say, and I've gotten in arguments with professors over it and lost grades. And if I'm a student, my job as a student, and I tell this to my kids too, your job as a student isn't to outsmart the teacher. Your job is to get an A. Okay? So anyways, so yes, they will prove to you higher interest rates will attract investment. And that will increase the value of the dollar. Of course, it's wrong. Okay, very cool, right? So good thing we hang out together. So interest rates right now are skyrocketing and the dollar is weak. Okay, great. All right, very cool, very cool, very nice, a kiwi, kitty cat. Maybe I'll show you some of these on the weeklies. I don't think this is weekly. No. Let me show you the weekly. I think this was one of them that looked good. Yeah. Okay, check this out. Okay, this is Monday? Monday, maybe Tuesday. Okay, and this is a swing trade. Okay? What are you supposed to do in this green zone if you believe the market is bullish? Like, why do we even have this as a tool? What does the green zone mean if you're a bull? Oh, buy it. Okay, so I'm supposed to buy it. And then what? There's the conservative target. Huh. Well, I don't like that because it's too simple. It needs to be more complicated than that. Okay? That's... Yeah, and now you're supposed to be out. Okay? Do you understand? I want you to catch these. Look. These are all buy zones. There's nothing on this chart that says sell. Do you notice that? Bullish, profit zone, aggressive. Profit target, conservative. Okay? Look at this. This is the conservative. What I'm trying to say to you is it's Wednesday, and we knew this last week, that we would be buying right around this 83. We knew this last week. Thursday. Thursdays are the best days. Okay? We knew that on Thursday, that the swing trade plan was this to this and then likely out, depending on how aggressive you are. Isn't that nice? Yeah, whatever. Makes me happy. Makes me happy. Okay. So that's yen, that's some dollar. Let's do some commodities. Gary's in it. Yeah, a little early, right? But that happens, right? Okay. All right, commodities. Let's start with this one. Whoa, dude. Anybody gonna buy it? So going back to last week, the question was, are you going to buy it here because it's a double bottom? Okay. Do you guys remember that? And then we were talking about double bottoms of double bottoms. Okay. So now you have another question you have to deal with. Are you going to buy it here on a roll reversal? What is it you want to do? Is this a 1, 2, 3? Is this a hammock or is it not? Stephen just caught it, huh? Did you just catch it in like last couple of minutes or did you catch it earlier in the week? Marina got it? Right on. That was a scary one though, right? Because you're buying a drop and a drop is not a dip. But at some point you got to do something, right? So the thought process is what I'm into now. So you'd get off this chart and maybe you'd be setting this up for next week, right? Or tomorrow. Okay? So again, I'm pushing you guys. Are you thinking in advance? Are you prepared before it happens? Okay? Sorry, I'm just looking at geese flying by. They don't typically fly that side of the lake. But anyways, yeah, are you thinking ahead? Did you have that priced out yesterday? Or are you reacting? Okay. Okay. Cool. You can do biddy. I think we were saying like it was 45,000, wasn't it, yesterday? I'm like, so what are you going to do? What are you going to do? Okay. So what we had yesterday was buy it at 45, which was almost $5,000 ago. And then if you're a bear, you'd be selling it at like 53, 54. Bulls would buy it low, bears would sell it high. I'm not suggesting both. But if you're a bull, you want to buy it off that 21. Didn't we just talk about this? This is a 21 EMA. And a bear is going to sell a shoulder. or a top. So a bull only has one plan and a bear has two plans. And of course, which one does a bear take? Well, that's what technical analysis is. So you don't need to ask questions like that. You watch it and say, well, if it comes up here and it rolls over technically, well, that's why you use technical analysis. So you say, okay, that's it. Okay, this could be where bears sell. This could be where bears sell. This is where bears could sell. I don't know which one they're actually going to sell en masse, but that's what technical analysis tells you. You're like, oh, they're selling en masse. Okay, cool. Okay. So like daily 21 rally, bulls should have their stops jammed at break even, and they're going to let it run. Now it's up to the bears. Are the bears going to sell it? I don't know. I don't know. Okay. I don't know. All you need is a tweet from Elon Musk or Donald Trump. Wait, he can't tweet anymore. All right. Okay. Cool, right? So that's what we talked about yesterday. So I don't know if you made $5,000 on Bitcoin since yesterday. That would be what, 11 to 12% return in one day? Yeah, it's all right. It's all right. Yeah, it's all right. It's all right. That's all right. That's a pretty okay day. Yeah, it's fine. It's good. Yeah, it's good. Yeah. It's all right. It's all right. Yeah, fine. Cool. All right. So this is what we did yesterday. Let's see. I double drew. Let me drag this across. We already had this here. So we had a buy zone inside of a buy zone inside of a buy zone. So if you were a bull, you bought it. Yeah, boy! Now, once again, let's talk about something. How do you know it's going to go up? This is simply Newtonian physics. That's a great opener, isn't it? That's how you get very attractive people to just lean in and say, tell me about Newtonian physics again, Wayne. And you're like, well, the whole universe works together like clockwork. It's a giant machine. So if I see macroeconomic expansion, I see risk on, I see bond yields rising, I see the value of the dollar falling, I see an increase in demand for commodities, and therefore WTI goes up, so I buy dips. And they're like, oh, you're so dreamy. You're so dreamy. I love it. Well, here's the thing. So I'm selling dollar versus pound. I'm selling dollar versus euro. I'm selling dollar versus Aussie. I'm selling dollar versus Kiwi. Selling dollar versus gold. I'm selling dollar versus Bitcoin. I'm selling dollar versus oil. I'm buying the stock market. I'm selling the bonds. And do you understand? It's like one thing. And I can get 19 trades going because I made one decision. Now, again, ask yourself, what are you doing, or what did you used to do, and what have you improved on? But many people either don't make a decision, or they treat all these individual trades I just talked about as individual decisions. And they don't understand why anything works. They just look at it and say, that looks good. I guess I'm going to buy WTI, and then I guess I'm going to sell CAD yen. And I'm like, wait. Yeah, you can almost hear like the record scratching as I pull the needle. What the hell are you doing? Oh, well, MacD told me to sell the CAD yen. I'm like, well, this doesn't make any sense. You just bought oil. Yeah, well, I don't know about nothing. I don't know. MacD told me to. And all of a sudden, you just don't get it. Okay, now I have to push you out onto the ice floe and say, you're out of the village, man. Just get out. Just pack your shit up and get out. Okay? You're out. You're on your own. You don't belong here. Okay? Because you have to understand the why. If you don't understand the why, then you'll never get it. Even if you get the what. What do you do? Well, MACD told me to sell. Well, you're missing the whole point. Like, wow. You don't get it. Okay? And in this case, you would ignore the MACD because MACD is A, not thinking, and B, it's stupid, and C, it's lagging, and D, what do you want to do again? Right? Like, what was the purpose of your trade? I don't know. MACD told me to. Oh, well. If MACD makes the decisions around here, I don't need to pay you. So hit the bricks. Okay? All right. Too much facetiousness today? Maybe. All right, so we did commodities, we did the dollar, we did yen. I think some of you guys asked for what? ZAR and peso. Let's take a look at that. Let's do peso. Oh, faux show, peso. All right, so technically, I guess we could look at this, back this out. Okay. Okay, out of position, 4-hour 21, up into the profit zone, take profit, expect a counter trend, back to the 20 or back to the central pivot, and then reanalyze. So now we're kind of in this zone here. Well, what do we know? What do we know? Like, not what we think. What do we know? What pivot point is our bottom? S1. That predicts R1 is a top. So right now, I think we're actually neutral. So what has to take control now is your outlook for either the Mexican peso, the US dollar, or both. Okay? So a bull is going to think this, which is risk off. A bear is going to think this, which is risk on. And I don't know which one you are. And if you don't know which one you are, then you shouldn't trade it because there's no way you'd be able to make this decision. Okay? It's like in the macroeconomics class I did yesterday, I said, okay, we got price, we got quantity, okay? We have equilibrium, demand, equilibrium, supply. And then I say there's a double shift. Right? No, let's do it this way. And this color is weird, right? So we get a double shift. Let's do it this way. Okay? What happens to price? We don't know. We know quantity changes from here to here, Q1 to Q2. But what happens to price? I don't know. It could be a little higher, a little lower. It could be a little something. But we don't really know. It depends on how much does the first one shift, how much did demand shift, how much did supply shift. We know quantity goes up, but what happens to price? Is it down a little bit? Is it above a little? Is it exactly the same? Well, actually, it's impossible to tell. It depends on how much each shift curves, and the model doesn't kind of work by that. And so you don't really know. So this is sort of like, it's indeterminate, right? If you don't know if you're a bull, or if you don't know if you're a bear, then you don't know what you're looking for. You don't have a model. I mean, you don't actually know what you're doing, and therefore you should just walk. Just, dude, don't trade it. So a technical person might say, well, Wayne, I see this. Good, then you should buy it. But you're not watching any macroeconomics. You're not paying attention to anything Jay Powell said yesterday. So do what you got to do, son. Okay? If you're pure technical, right, you're either a gullible or a ning cow poop. You get it? Cow, bull. Okay? And you might do this because it looks technically beautiful to you. You need to filter out based on your intelligence. Okay? Do you want to be special forces? Or do you want to direct traffic standing next to your Humvee in downtown Baghdad and you're directing traffic and you're like, oh, yeah, I signed up for this. Which one do you want to do? Okay. Special forces, saving lives, or directing traffic? Cool. Anyways, let's take a look here. And I ran so far away. So, good. We got a nice little test here. We're heading down. R1 is the top. What's the projected bottom? S1. Oh, look, that's where we are. We hit it. We stopped. Right now, absolutely perfect. Absolutely beautiful. And you can look at it and say, oh, I recognize this. I've been here before. Okay? So, where are we going to be in a month? I don't know. Isn't that your job? Okay? So, now you got to think about that. Very cool. So, I can jam my stop. I can take a walk. I can do whatever. But right now, the trend is still working. Okay? Technical analysis is working beautifully. Okay? So it comes down to like, what's your plan for next week on this thing? And you might be thinking like this. Nice. Very nice. Very nice. Very cool. And the interesting thing about that one is it also overlaps next month's trade plan if you're still a bull. Now, if you're a bear and you think we're going to go up here, then that's cool. So you'll have to deal with this. Okay. In fact, you might be about an hour late. Okay. Where were you an hour ago, right? When I first started the webinar. Cool. Okay. So again, my choice here is I can lock in some pips or whatnot, whatever. Okay. Whatever. We can look at our euro. And remember, this is the one that I said would lead to mediocrity. Okay. We got some trades going on. I have to go back a long ways to fit them in. I have one trade here and the other trade here. Okay. And if I remember correctly, it was a January trade. So, yeah, this was predicting the yearly high, I think, right? So triple top, lower low, lower high, sell. So I literally sold that. Cool. And the other one was, oh yeah, the next month. Oh yeah, it's just a monthly position trade, right? And here's the second one, little front run. Nice. So what I probably should have done is sold it. Is it early in the month? No, I guess it's not. Wait, is there only 28 days is February the one with less days? Yeah, it is, right? Maybe I screwed up. Typically, you wait for the end of the month to front run. And I might have thought there was a week next week. But there isn't a week next week, is there? Hang on. Yeah, son of a... Wasn't even paying attention. Yeah, I probably should have sold this yesterday. Ugh! Forgot it was a front run. Gold, dang it. Okay, this would have been a good place to sell it. This week's top, but next week's entry. Oh, shit. All right, hang on. I need 3 seconds to ring a bell. I'm upset. All right, so anyways, nice position trade here, nice position trade here. I probably should have sold it yesterday. Son of a... I forgot there... Son of a bitch. All right, so I'll have to make that up. It's hard to trade out of position. Anyways, so that one might be working. I still have 1,500 pips left. So it's all right. So I've given back, even just in the hour, like 250 pips. So we'll see what happens here. If I get this right, I'll be happy. All right. So I think I think a week has gone by, and here's the thing with carry trading, right? A week has gone by, and I still have 1,500 pips. There's been some up, some down, but if you only looked at your charts once a week, I'd look at it and say, nothing happened. Okay. So I got to filter through all these things with my fundamental biases. Okay. Okay. So yeah, for as far as this one, I would have thought Friday might be it. Okay. Friday might be the trade. So here's what I might do with peso, although it's an inside month. So typically, guys, a repatriation trade is going to look like this. So I'm going to kind of I might try it. I don't like it technically right now, but I might do it anyways. Not really sure. Okay, but that looks pretty good to me. So it's 2060, something like that. Okay. Let me ask a question here. How many people in the chat, how many people watching right now have held a trade for more than a month, wait for it, specifically because I taught you to? Like, you would never have done it before. Then after watching me coach for a while, you try it, and then you did it. But only because of me. Now, if you did it because of other people or other reasons or something, but I want to know, like, have I changed anyone's attitude directly? Alex, Ronald, Master? Yeah? Like a month, right? Yeah, cool. Maida, right on. Elmer? Okay. PF is trying, but it's hard. It is, isn't it? Very, very good. Sophie, too, yeah. I'm itching to get back to New York. I'm gonna call up the Harvard Club and see if they're open. I might head up there. I'll give it maybe a month, and then maybe I'll head back up there. Cool. Anyways, 2 months. Brinsley's got a 2-month. Revolutions, yeah. Euro Turkish lira shorts, yeah. Right on. Marina's like, no. So Marina, you're still, well, maybe you do it, but not because of me, which is a fair answer. Or you're more short term, which is fine too, right? Samuel's just kind of getting there, yeah. Brian tried for a week. I love that one. I tried for a week, which is interesting because, like, almost all my trades are at least a week, right? So, very cool. Yeah, and it's very interesting. Like, I think the year where I only traded 1-minute charts changed me or matured me, or, like, not to say that you're immature, but I grew personally as a trader because when I traded a whole year on a 1-minute chart, because the more I traded, and I mean, I did well, but then I wouldn't do well, or I'd do well, and then I'd lose a few in a row, and then I'd make a few in a row because I kind of would change what I was doing as a and then I got to this period of trading the 1-minute chart, like maybe 3 or 4 months into it. I felt like I remember the feeling. I don't know how to put it in words because it was a feeling, but I felt like I was missing something, like I needed something, like like, oh, if I only had a spoon, right? Like, I'm doing okay, but if I only had a spoon, if I only had a spoon. Like there was something, right? Like a nagging feeling, right? And I suppose after that period, I went through sort of like binging on other things. And then I'm like, but then I missed what I did on the 1 minute chart. And then I realized through my own process of binging and purging, I found sort of a harmony between the time periods. Okay. Right? Like the common frequency between space-time dimensions, and all of a sudden I'm like, oh my God, I can float through time. Like all of a sudden, it was almost like a Neo one day just could see the Matrix or something. It was like, oh, I see how the 1 minute and the 5 minute and the 15 minute and the daily, and it, like, I don't think you just do it. I think it was years of experience. And then I focused 1 year on trading the 1 minute chart. And then I backed myself out and I don't want to look at a 1 minute chart ever again. And then all of a sudden bringing them together, that's why I call it sort of like a maturity process, this maturation of trying something I never did, and then missing what I used to do, and then going back to that, but then missing what I had learned, and then saying, well, why don't I put them together? And that's when finding how the short term and the long term work together it just felt good, right? So Brandon, it's like day trading and working for a couple of years at that now. Day trading is awesome. I love day trading, right? I love day trading. Right? So it was like, how do I put these things together? Because I enjoyed scalping, right? I enjoyed scalping. I enjoyed essentially market open trading. So I used to trade daily pivots, 15-minute charts, euro dollar every day at 8 o'clock in the morning till about 11 o'clock in the morning, New York time. But I did it, of course, in California. And so like when Jim joined FX Bootcamp, I don't know, 15 years ago, that's what we did. Day trading, market opens, 15-minute chart, euro dollar, pivot points, daily pivot points, and these charts, like literally 2155, 58, 200 with a MACD and a Stokes kicker. Okay? And so all these years later, we're still teaching market open techniques. We're still teaching 15-minute charts. But now I have additional experience since then where I feel comfortable on a 1 minute chart. I feel comfortable on a daily chart. I feel comfortable holding trades for weeks and weeks and weeks. Okay. Now I did that back then because I remember people going through, I remember like, Jim, do you remember Donald Shemansky? I forget what his hotcom name was, but for some reason I remember this. I'm at like Costco and I'm still in California, and I guess I didn't have kids yet, so I must have been with my wife. I'm not even sure if I was married. I don't know how long I was married. I might have been married. I'm not sure. But I remember being at Costco and my cell phone rings and I'm like, oh, it's a boot camper. And I take the phone and he's like, I made my first 1,000 pips, right? Like 1,000 pip trade. And people were excited about making their first 1,000 pip trades. And that was definitely like a pound yen stuff. But we would teach that 15 years ago, how to enter a trade on a 15-minute chart and hold it for weeks, right? So it's kind of cool, like, as you can blend these things together. Now, bear this in mind, because it'll sort of, my openness and honesty will probably help you in your process of growing too. Back then, I didn't know anything about fundamental analysis. Nothing. Okay? I could tell you CPI is a basket of goods and services. It's a measure of inflation. That kind of stuff, maybe, right? So along the way, I learned a few things, and I continue to grow today, right? I remember reading a very stale book on the bond yield and yield curves. And then a few years later, I'm teaching it, right? It's interesting how you continue to grow. And that I think all of these things are necessary to the human spirit. For whatever reason, you will go through similar challenges. It's just nice to have a guide so you don't have to sit around going, should I be studying bond yields? And are all my college professors wrong when it comes to high yields, high valuation for the US dollar? Like, could that possibly be wrong? Like, how do you get to the point where you're like, is my education wrong? Right? And then, well, why is it then not true? It's such a hard journey. So you guys push me to think and push myself to, right? You push me to learn more so that I could teach you more. And therefore, now you have that growth. So it works. You push me, I pull you. Right? I'm just reading Marina's analyzing. I break down from the weekly to the 30-minute. Fine. But then I take entries on the 35 and 1. Totally fine. My favorite analysis time frame is a 4-hour as I'm a day. Yeah, that's perfect. That's fine. Absolutely fine. Right? Yeah, works pretty good. I would challenge you though, Marina. I would, or like I challenged myself. Let's say if I was in that situation, I would challenge myself because I was in that situation. I did challenge myself, and the outcome was good. So I would say this to you as I said this to myself. I would take its demo account and I would measure if you manage the risk differently, because obviously your risk management is good. So there's no need to change. But there should always be testing and reflection, right? So I would take those same trades and say, well, what if under certain circumstances you held those longer? Could you outperform what you're doing now? Not changing your analysis, not changing your trading technique, but just managing the risk management. Or let's say, I don't know what your average trade is. Let's say your average trade is 100 pips. You say, well, what if you, on your demo account, instead of getting out with 100, you try for 200? You just throw down a 200 pip limit and see what percentage of the time you hit it. Because I think what I found, Marina, is like, let's say 10 or 20% of the time, it actually went farther. And I'm like, oh my God, all I did was like manage it differently. And then I had to figure out, well, why did it work that situation and not in other situations? And it kind of gets you to think like, oh, well, maybe when I do that in the third week of months, very often it does run farther than I would have initially thought on a weekly or a daily basis, right? So instead of like, well, in the third week, if I'm buying at support and I let it, instead of getting out with 100 pips, let's say I put a 300 pip limit, let's say 40% of the time it actually goes through and hits the 300. And then you're like, well, why does it do that? And you're like, oh, I'm inadvertently front running next month's pivot points. And now all of a sudden you're like, well, I'll treat the third week different than the second week. And 40-50% of the time on that week, you end up picking up several hundred more pips by doing nothing but letting it run a little bit longer. And you have a reasonable feeling of why it might actually work, right? So again, I found my trading technique doesn't have to change, but my management technique can lead to more profits. But I had to challenge myself because I was perfectly fine. And that complacency, I think, can be challenged as you grow, right? So I would always challenge, you as I challenge myself, like, what if you could make 25% more money by just managing your risk a little differently? And not just that you let them run longer, but you find out when or why sometimes it works better. That's the thing. Not just that you let them all run longer, but since they're demo, you let them all run longer and say, well, when does it work best? And then if you can incorporate that best part into, let's say, a monthly period, you say, well, in this period, because now that's alpha, right? You see what I mean? Now there's some alpha there where you're like, I know for whatever reason, if I behave slightly differently at this particular time, like maybe it's throughout the year, maybe on March and November, you hold longer than you would in other months. And you just say, well, I know 70% of the time I'm going to hit the bigger target by doing nothing but doing it. Okay? Yeah. Well, you know what it is? It's always testing, not back testing. That's garbage. But analyzing what you're actually doing. Gathering data is important. And then saying, well, if I tweak, how does it change things? And more importantly, once you see a change, why? If you're always asking why, it's going to lead to good results on the long run, because you're always right. And I think I was complacent for a while because I was doing aight. And then I tried something different and could improve the results. But that's what it's about, right? That's what it's all about. And then learn a little bit more. Well, why is that true? Why is that not true? How can that impact, right? And all of a sudden, because I was there when I learned, right? Like, so I have these vivid memories. I remember sitting on the back porch. It was at my other house. It was raining, and you can hear the rain on the tin roof of the back deck, looking out in the backyard and the forest and everything. And behind the forest was my golf course, right? And which I named after the pound yen. So again, that occurred when the market was bad. The pound yen was so brilliantly awesome. So it was right during a point, I think probably 2008, 2009, the market was crashing. It was an epically awesome year. It was awesome. It was awesome. Everything crashed. Okay? It was awesome. But anyways, so there, right, I can hear the rain on the tin, and it was at night because I remember it being dark, so I'm out there and reading a book, right? Reading a book on the yield curve, about the yield curve. A whole book, hundreds of pages on yield curve analysis. Okay? But I got there because I was challenging certain assumptions. Okay? Right? Trying to break out. Yeah, YouTube's is it my router again? Oh man, I was just sharing some gospel, man. Google speed test. No, it ain't me. It ain't me, guys. I don't have, I usually do have faster than that, but 600 is enough. Okay? So anyways, I don't know if you can hear me. I can't tell if you hear me or not, but I'm going to continue because you might be able to hear me. If you look at that issue, okay, if you look at that issue, big drawdowns and swing trades, it tells us something. Okay? It tells us there's a timing issue. Okay, good. It's a timing issue. And here's the interesting thing, Marina, because I'm assuming you're good at the smaller time frames. You're really good at analyzing market conditions. So if you put that in conjunction with a long-term fundamental bias, and you're trading that together, you can tweak the timing issue. You're because of your strength, you're actually better apt at fixing. Okay, you see that? Your strength gives you a strong capability of fixing that weakness because you're good on the short term. Now you have to like learn or improve, let's say, the structure of your entries for holding the bigger position. Okay? So you definitely need to do this on a demo. So that way you don't have to worry about the drawdown. So one thing I would do is like, how big is the drawdown? I mean, you don't have to answer here, but like you should analyze that. So I call that a pain to gain ratio. And it's hard to calculate because you have to calculate it through equity, not pips, right? Like if your average swing trade goes negative 99 pips on average, but it on average is it yields 300 pips. You have a 3-to-1 pain to gain ratio. So you're not able really to control how many pips you make on a trade. I mean, you influence by trading with a trend, and seasonality and stuff can affect it, but also news, changes in fundamentals, surprises, exogenous shocks, black swans, earthquakes, terrorist attacks. There's a lot of things that can go wrong, and you can't really influence how far your trades go because the only way to make a currency go up is someone else has to buy it after you bought it. So unless you keep buying it, well, then you're just pushing it up with your own money and you're not actually making money. So you need other people to buy it, right? So you can't control it once you've entered, but you can place 100 swing trades and pay attention to how big the drawdown is before it turns profitable. Okay? So the mental part, Marina, would be you address it through experience. It's like being terrified of public speaking. It's like being terrified of skydiving. If you could do it 25 or 30 times, right, it may be less terrifying, but it might be something that you always have concerns about, but you learn how to harness that concern into like safety. So you know how to, through control. Okay, a lot of people are control freaks because they're terrified of the unknown. So you want that person to be your accountant, right? That they're terrified there'll be a mistake, and what if there's a mistake? So experience, I think, can really help. It won't make it go away, but also being terrified of drawdowns is good. That's the thing, it's good. It's a good thing. But you should, through a demo account practice, for example, address the demons. So the one reason why I traded the 1 minute chart for a year is it was known, it was a common fact that you cannot trade the 1 minute chart because it's all noise. And I said, is that true? Okay. And I challenged it. And I figured out, well, there's a lot of truth to that. But I can also address that with reality too, right? So that's what I would do if I were me and me was you. Okay? So to say, look, you got a lot of talent. You're really good at this one thing, and it is producing results that you're comfortable with. Challenge the comfort on a demo account. Because one of two things will happen. One, you'll find out, you'll reinforce that you suck at swing trading. And you're like, whoa, I suck at this. I'm never going to do that again. But then what would the outcome of that be? You'll end up loving what you do even more. But what if you end up being 25% better? Then we're going to party in Cape Town. It's going to be epic. It's going to be epic. Then we're going up to wine country. A friend of mine actually lives up the hills of Cape Town and down on the other side. And he's like, you should come and drive my Ferrari. It's awesome. Just driving up and down the mountains just outside of Cape Town. So we're going to go to Cape Town, drive his Ferrari. He's a funny guy too, by the way. Clinical psychologist. Yeah, he's a funny guy, man. We'll call him up. We'll have him come in and talk about psychology. Oh my God. All right, cool. Woo! What a day. Oh, it's Wednesday. Wednesdays are the best days. So remember, oil is going to move today. Canadian dollar is going to move today. Simple stuff. The sun is finally shining in Georgia. The birds are out. The deer are out. The herons are out. The egrets are out. I haven't seen armadillos yet. What did I see the other day? I saw some animal going, and I'm like, oh, okay, it's warming up. People are coming back. People are coming back. Or animals are coming back. What was it? I can't think now. Not an armadillo. But anyway, so we're through the horrible nastiness of winter, I think, and every day is going to be better than the next. Oh, I know one thing. The sun came up like 15 minutes earlier today. I'm like, how is that even possible? When one day it's 15 minutes earlier. And my wife's like, well, maybe the weather's better now. You know, when the sun rises, the weather's clear. Nice. Sounds like a high pressure to me, and that's good. Marina's like, maybe you can help. Well, that's the funny thing about clinical psychologists. He's probably nuts. You guys know the actor and comedian Chevy Chase? He was in first season of Saturday Night Live. You probably know him as one of the characters from Caddyshack, or maybe you understand him as Clark Griswold from National Lampoon's Vacations. You know this guy? You guys know who I'm talking about? His stepfather was a clinical psychologist. His mother got remarried when he was 3 or something. So when he was like 11 or 12, he was raised by this stepfather, clinical psychologist. So he said, yeah, one day he was late for dinner. So his dad locked him in the basement with food and water and a mattress to sleep on for a week. He's like, that was my stepdad. You're like, what? Locked him in the basement. Bare minimum survival. Right? Some water, some little bit of food, a mattress to sleep on. Locked him down there for a week. Wow. Maybe that's how he deals with his emotions, right? It's funny. And there you go. Clinical psychologist did that. But he said, hey, his dad fought World War II, seen lots of blood and guts, and was a hard man and focused on discipline. Like, you are not going to be late for dinner. You're disrupting my plan. You are late, and you will never be late again. So I don't know how that compares to your dad. But, wowzer. So I'd be careful with clinical psychologists because they're probably all nuts. right? They're looking for crazy people so they seem less crazy in their own mind. So anyways. And if you're a clinical psychologist, I apologize. I'm just having fun. But that's the true story about Chevy Chase. Okay? Clinical psychologists make the best comedians. So, peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow at Forex.Today. And then, of course, tomorrow is Thursday. So, another session of our swing trading group. So if you'd like to join our swing trading group, you go to fxbootcamp.com, you insert a credit card. It's currently almost 80% discounted. And then it'll say, hey, what's up? You joined. Do you want to join the live group too? Do you want to join the swing trading group? You have to kick down, come clean, and not be a holdout machine for that one. A whole $99 a month. See you tomorrow.